Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.
We have our next session, which is focused on a very refreshing view on unified credit decisioning. We have as our esteemed speakers, Mr. Ashish Abraham, Head of Credit Analytics and Innovation at HDFC Bank. And along with him, we have the moderator as Ms. Ashwini Patil, Senior Vice President for Product Engineering. Ashish. Mr. Ashish has been with the bank for almost 2 decades, during which he's built up a strong team to support analytics-based decision-making across all segments of lending, from retail to SME and wholesale banking. While Ashwini has nearly 20 years of experience in software development, and she has played a key role in leading credit risk and analytics solution development for banks and financial institutions. So with this, let's put our hands together for this showstopper session with Mr. Ashish and Ms. Ashwini Patil. Over to you, Ashwini.
Thanks. Hi, good evening, everyone. Thanks for the long day that you've been spending with us. So, Ashish, I mean, this is the topic that we all have been waiting for. And we have heard this throughout the day, and this has been the talk, around credit decisioning. So what do you think when you think of the term of unified credit decisioning and how important it is in today's world?
Thanks, Ashwini, and good afternoon to everyone. Thank you to Lentra for giving me the opportunity to speak here about our experiences. So, very simply put, unified credit decisioning is that, when you meet the customer at one interface for the bank, and the customer is looking for a certain product, they make some information available. How do you use that information to, offer the entire set of products that the bank has to the customer to choose from? And I didn't know, but Sumant has already rechristened this the Thali approach about a couple of sessions back. So we'll call that, by that name now. But so that's the thing. So it is simple in concept. It's actually quite difficult to pull off, because at the back end, there are 2-3 different things you need to do. Usually, each product has a different journey. Each product has its own credit policy. It will have its own set of documentation requirements. But, to really give the customer the experience of instantly being able to see all the offers that he or she has, you just, you have to use that information that you have and, rewire whatever models there are, the rules and the policies, so that, you can figure out what the customer's eligibility would be across, the range of products. So it's not easy to do, and it requires a lot of, reworking of the traditional models, journeys that we have. And the second thing that, needs to be done is that you need to have a strong limit management system at the back, because it's not just about showing the customer the range of offers, but if the customer does choose one, so for example, the customer has come, she's looking for an auto loan, and based on that information, you've figured out that the customer can also get a credit card of 3 lakhs, and she can take a CD loan of about 1 lakh for the next time she wants to upgrade her phone. But if the customer picks and chooses some of these products, then at the back end you have to change the limit also accordingly, because otherwise you're going to bust the risk appetite that you have on the customer and end up over-leveraging the customer. So that's what needs to be done at the back end. I think the concept is becoming quite powerful now, because in the older times, or even now actually, customers used to come and have CASA accounts with the bank. Banks used to leverage that information and figure out what all you can offer the customers, and all those offers are available for the customer to choose from on the net or mobile banking. But here we're talking about new to bank customers, right? So even for a new to bank customer, can you give that upgraded experience that having touched the bank even just once, she can still see the full bouquet of products that he or she may be eligible for? And what is helping is all the digital infrastructure that's coming in place, the DPI, etc. Where with digital information, it's a lot easier to rewire your models, etc. To be able to figure out what you can give the customer. And yeah, so that's picking up how, you know, what used to be ETB can now be also offered to NTB customers.
Yeah, so I think NTB customers, as we refer to them, is something that we all in the industry have been grappling around on how to convert them into ETB. So I think that pretty much answers what you just said. So so there have been
You should just clarify, ETB and NTB is jargon, but ETB is existing to bank customers and NTB is new to bank customers.
I just assumed everyone knew it here. So. Okay, so so what we've been also hearing about these trends, right? Embedded finance, open banking, banking as a service, all of these terms, and how do you see this space evolving today?
So, I mean, very simply put, you know, banking as a service or embedded finance is when the bank makes its products available on a non-banking platform or application, right? It embeds its APIs in that journey, which doesn't belong to the bank. And the customer can then avail of that product without actually seeing, you know, the bank at all. I mean, simplest example would be the customers on an e-com platform, they want to buy something, and then, you know, they need a loan to purchase that product. Can you embed your loan APIs right there so that the customer can take the loan, take the product and leave? That's the most, you know, simplest instance, but it can be more, right? There could be LSPs which distribute, you know, all sorts of financial products. So that's what I think, you know, what we mean when we say banking as a service or embedded finance is, and it is a powerful concept, you know, for all parties, for the non-bank application or platform. It can become a growth driver, it can become a source of revenue, it improves customer stickiness because you're being able to offer, you know, the full range of products. And the advantage of working with a bank is that, you know, you are going to be transmitting information up, you know, back and forth. So with a bank, you have the security that the customer's data is going to be used responsibly. A bank that has great APIs is going to give a very smooth journey to the customer. That's very important because if the APIs don't work as you intend them to, you are ruining the customer's journey, even for the application of the platform, right? For the bank, this is a great concept because, you know, again, coming back to the ETB, NTB concept, with ETB, you had a large base of customers to whom you could offer your products. With NTB, it's always one by one. One customer applies, you know, give the product. But with this, you know, the bank could technically reach out to the entire, you know, set of customers that application or platform has, right? And offer the full range of products, you know, that it has. So it can help scale, you know, growth for this. Open banking is a little different. It's not offering products through these APIs, but it's offering information through these APIs. And of course, in India, account aggregator is the most prevalent this thing. And it's really taken off. I think if you see where we were a couple of years back, you know, the manner in which account aggregator is being used by, you know, all the participants has scaled tremendously. A lot of digital journeys are being built on that. It is going through, you know, some issues as you would expect, you know, with so many participants across industries, but everybody is very committed to making it work. So with all of that, you know, I think it'll click. And this also ties back, you know, in a way to the unified credit decisioning that we spoke, because you use that data, you use the set of APIs, and you can offer the full bouquet of products. So I think they're, you know, related in that way.
I mean, so we've been working with Ashish since what, 8 years now, and so the next question is more around a topic that's very close to your heart that I know, and I mean, we just spoke about a lot of data being available, and to process this data, obviously we need some kind of AI and ML to come into picture, right? So what is your take on the role that AI and ML is playing in algorithmic lending, as we call it?
So I'll break it into two, AI and ML, right? I think they're quite different. So ML is now quite prevalent now, I think, in lending, financial services. You know, with machine learning, you can process a very large volume of data. You can, you know, run at scale. You have a variety of techniques that you can use and, choose the best model for that particular option. And I think it's used, like I said, quite extensively, especially in retail lending. Once you go into the larger ticket size SME or the corporate lending, then it becomes a little riskier because the data points are fewer, and then there is a tendency to maybe for the model to get overfitted on that data. So there, you may tend to use more linear or logistic regression and technique and bring in a strong element of human oversight. But that's there. ML, I think more recently ML is being used to get structured data out of unstructured data. There are large parts of the country where digital data is still not available. Customers give pictures of the bank statements, salary slips, and getting the information that you need out of that needs a whole lot of ML libraries. So a lot of work is on. We've also done a lot of work there. So that's on ML. On AI, so that brings in a concept of cognitive understanding into the decision-making process. So I'll be frank. As far as credit acquisition goes, we are careful about how we use AI. There are a lot of things you can do to hasten. So I mean, AI is that instead of taking a month or two to build the models automatically learn and recalibrate, right? But actually, if you see, the longest time, the components that take the longest time to build a model is the data ingestion, is the data processing. And that, if you can use, and this is the kind of stuff that we are doing in the bank. We're building data pipelines, so that will automate the whole, data ingestion process. We use ML pipelines to, build a range of challenger models. And these can be used to check, whether the champion model, needs an upgrade or not. So we're doing all of that, but we do have, the stakeholders who are involved, reviewing, what the model output is. And so that's what we're doing. Of course, the new kid on the block, I think the previous session or 2 sessions back, they discussed is Gen AI, right? And that's changing a lot of things. In lending, so far, we think it's going to be more useful at the front end for customer interactions to make them more lifelike, right? And at the back end, we're exploring how we can use this to improve the coding, that happens. Again, reading large volumes of data as you need to do in SME and corporate banking. There's a lot of information on the internet. How do you take all of that, synthesize it, and bring it to one place? And again, getting structured data out of unstructured data. So that's where Gen AI, I think, is more prevalent in banking and financial services.
Today during the day, we also heard, the RBI spokesperson speak, Mr. Dash, and then that was followed by a few panel discussions where there was a point around, the restrictions or the concerns that RBI has around recalibration of such models, or with the Data Privacy Act being remodeled. So there are a lot of regulatory changes that are coming in this space, and we all know like HDFC Bank is one of the early adopters when it comes to regulations, right? So how much do you think such regulations are going to have an impact on whatever we are trying to do as, as something new or something different using the machine learning models that you just mentioned?
So I don't think I'd say that it's a challenge or it's a restriction. I think it's guardrails that the regulator wants banks to have, and these are very important because if you don't have them, you could end up harming the bank or the customer, right? You can end up over leveraging customers, giving funds to the wrong person. So that's what it needs to be. Like you said, yes, we are always early adopters, right? We're very careful about how we do these things. In terms of data, whatever data we use, we try and ensure that we have the right consents in place. We are always knocking at our information security teams and the data privacy officers' door to make sure that, we have the right consents in place. So that's as far as data goes. In terms of being careful about how we build the models, it's critical. And the way we do it is basically, you have to have a whole lot of checks and balances in place at every step of the model building process, So whether it's at the data ingestion stage, garbage in, garbage out, so you have to make sure you've got the right data. You have to, segregate the data into the right cohorts, because if there's a dominance of certain cohorts, then that could lead to bias in the model, which is one of the, primary concerns of AI/ML. When the variables are ready, you have to have a common sense check. Do these variables make sense? The final explanatory variables that are going into the model. And finally, even when the model is ready, overfitting is a key issue that you need to look out for. So, you have to check whether the model is overfitted on that data or even on that time period, because, things keep changing quite frequently. So those are, some of the checks and balances, that we've put in place. We have a strong governance around the whole thing also. So we have an independent validation team, which does a completely independent oversight of the models that we build and the output that it puts out. We've built an AI/ML policy. There is an AI/ML council, and high materiality models are put up there. So overall, I think we have the right framework in place. Of course, the biggest room in the world is the room for improvement. So we know we will learn, but I think we got that right. In terms of, I think you also mentioned the frequency of how we do the recalibration of the models. So we do it with a certain set periodicity, which is, how often somebody would actually see how the model is performing. But, the advantage of using a lot of these automated data pipelines is that you can also continuously have the data streaming in. And you can set the right triggers and thresholds and say that, if the data moves out of the certain range, then that's a trigger that needs to be thrown out automatically, right? So everything need not, even on the validation side, you need not always depend upon people. You can, use tools and techniques such as this to make sure that, the models are doing what you intended them to do.
Yeah, just cognizant of the time, do you have any last, something for the audience also too?
Well, since this summit is hosted by Lentra, maybe I have a few words about our relationship with Lentra. So, in the context of what we've been speaking, I think as a bank, obviously, we do a lot of lending across products. We have a lot of tech partners that we work with. We use Lentra a lot for the kind of, small ticket, large volume, automated lending. We're doing CD and two-wheeler at scale. And in partnership with Lentra, we've managed to scale them up, quite significantly. Of course, there are learnings along the way. That's always happens when you're building these big businesses. So that's happened well. At the back end, we've been using MLB, for our entire bureau orchestration and models. So that's been there. The Brex, which is the new generation product for building and deploying models. So we're migrating to that. Hopefully with that, a lot of our advanced model deployments can become a lot faster and quicker. So yeah, I think it's a journey we're walking along with Lentra. I'd like to say that, I think this is people at the end of the day that makes the difference. And what we've seen with Lentra is that whenever the bank really needs something to be fixed, is something we need to get right about the product. There's, the people at Lentra are always very willing to come and help out. So I think that works very well and, keeps bringing us back.
Yeah, so thank you so much for those kind words. And like any other tech, the tech solutions provider, we are absolutely proud to have HDFC Bank on our platform. And thank you so much for spending your time with us. And thanks everyone for listening this through.
Thank you. Thanks.
Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.